Thank you, Mark, and hello from London. Well, last week I detailed a huge amount of technical patterns that were both weekly and monthly, and that also had just happened. And since then we have seen the outcome of a good few of them. With so many last week, it would be logical to have less, if any, this week. Well, we've ended up with quite a few, I'd say. I'd say to the more side of a few, and some quite interesting ones as well. So here goes. Last week we had a weekly key reversal down in US dollar Chinese yuan onshore 1-year NDF. Interestingly, there was no such pattern in the spot US dollar Chinese yuan onshore or the spot US dollar Chinese yuan offshore. So I would normally leave it there. And if you look at the daily chart for the NDF, you'll see there's been no follow through lower. However, if you look at the daily charts for the Chinese CSI 300 stock index, also the Chinex index and the Shanghai Composite Index, you'd have seen that all of them, all of these had at the same time as the NDF the lesser cousin of the weekly key reversal down, the outside week down. And they have had follow through lower on all of them, and not just by a little, but by quite a margin. Meanwhile, in ICE UK feed wheat futures in London, we had an interesting weekly key reversal up last week. One that came from a low base, specifically the 50% Fibonacci line of September 2019 to May 22 move at 245.10, aided no doubt by changeover, but one which saw a significant move above the neckline, currently 285.40, of the big March to June head and shoulders top. However, the move up was not sustained as prices backed off before even testing the next significant resistance, and that's the rising medium moving average, currently at 297.80. Though I'm not sure if that will be the only time we see the top side tested. The other weekly key reversal up we saw in the commodity was in the New York sugar contract, which was a very late developer, with the last half of last week creating a late rally and thus a weekly key reversal up. This was after previously testing down to the lower time, currently 1781, of the April to May bearish shift pitchfork, piercing it but immediately turning back up and then piercing the middle tine above, and that's currently at 1879. Only then did it get caught in the nets of the combination of the February 2021 high at 1894, the short medium moving average currently 1896, the medium moving average currently 1909, and the long moving average currently 1910, such that all these eroded the bullish incentive and prices dropped back down a bit, back down to the declining middle time. So it's still seemingly bearish, just not as much so as 2 weeks ago. Finally, for those who follow TikTok out there, two of the favorite stocks there, AMC and Gamestop, both had interesting patterns. AMC had a weekly key reversal up, and Gamestop had the lesser outside week up last week. Both had more than suitable follow-on moves higher so far this week. As always, I'm happy to share my videos, various charts, and answer any questions with anyone who wishes to contact me. And with that, I'll finish this section from London. I hope you found these comments useful.